Hi guys, and welcome to what's probably going to be one of the more exciting videos in the Atlas Blueprint, because we've covered a lot so far in terms of fundamental analysis, technical analysis, what we look for, the big players in the market, all these sorts of things. And now we're going to really look at tying everything together, everything that we've learned so far, and putting it all into a strategy which we can then employ in the market. Now, the first thing that I want you to remember is that this strategy is temporal, which means we can use it on any time frame. So we can trade this on the daily, the hourly, the 1 minute if you really want to. I actually prefer the lower time frames. So, I like the 1 minute, the 5 minute, 15 and hourly. But I do look at the daily time frame as well to give myself a bias for the day. But if you are if you're working a full-time job, for example, as you're learning, you can employ this on higher time frames for more of like a swing trading approach, so that you can still get to work. You haven't got to sit at your screens all day long. Day trading, you can sort of manage your positions every few hours, which is what's really great about this strategy. That being said, one is not more profitable than the other, in my opinion. You can make the same amount of money. Potentially lower time frames is you're going to get more trades. So if you can nail your strike rate, you will be making more money because you'll be trading more. But with the correct position sizing, the correct risk management, deploying the correct psychology tactics, if you will, and nailing the strategy, you'll be able to be profitable on any time frame. In this video, we are going to stick to the 1 hour, because I feel like 1 hour is a really good place for beginners to learn, because it's not too fast paced. It's not too slow. You're going to have 24 candles in a day. So it really gives you the ability to be able to soak up all the information that the market's giving you without it being too fast paced. But obviously the market's ever evolving. So on the hourly, you're still going to get day by day, the market's going to look completely different. So that's why I really think the hourly is probably the best time frame for people to start on as you start your trading journey. Now, I've got a chart of euro dollar open on the chart on the screen at the moment. Sorry. Now, you probably picked certain things up throughout this course so far, things that we look for and things that we want to trade. But essentially, the main thesis behind our strategy is to catch traders offside. Okay, so we want to be trading areas of high liquidity. Now, what do I mean by that? I mean areas where there's clusters of stop losses, where people are going to be wrong and forced to exit their positions. And where there's areas that we've highlighted that a big player has entered the market, either via algorithm or manual trading. Now, there's a few things that we look for specifically, and we'll jump onto the charts and I'll show you what I'm talking about. So what we do at the moment, I've got an indicator on called wick.ed fractals. Now, all this indicator does is just shows us the fractal highs and the fractal lows on the chart. You can see the triangles just appearing above and below the candles. Now, you might be thinking, what is a fractal high and what is a fractal low? A fractal high and a fractal low is just a high or a low that is higher than the candle to the left and to the right of it. So you can see this is a fractal high because this candle here is lower, or the wick is lower than the wick of this candle, and this wick is lower than the wick of the middle candle as well. So that's classed as a fractal high. Same down here, same down here, 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 here. Now, just because we have fractal highs doesn't mean that they mean something. Okay, we always want to be looking for highs and lows that sort of tell a story, that give a picture to us. Now, initially when looking at this chart, and obviously this takes time to sort of understand and to be able to employ efficiently, especially in live markets, but you want to be looking for highs and lows like this high here, where we know there's going to be a lot of sell stops. I'm going to bring that back here. Just make this the same level. Also realize I just said sell stops, but sell stops below, buy stops above. Now, why are we going to have buy stops up here? So we're going to have traders who want to trade the breakout of this high. So they're going to have their orders here to go long, which is going to be a lot of buy side liquidity. There's going to be buy stop orders up here. And we're also going to have traders who went short. Okay. So now what we've got up here is a cluster of a liquidity pool, if you will, because there's a cluster of stop losses and a cluster of breakout orders ready to be triggered upon the breakout. Now, what we look for is we want a bit of confirmation. So anybody who, you know, got spiked out there, they would have puked the high, or if you was trading the breakout there, you'd have been stopped out pretty much straight away with this candle, I would imagine. And now this to me looks really nice because we've had a couple of breaks of structure. So we've had a break of this fractal low, which to me doesn't really mean a lot. There's not much behind it. It's just a low that we've left on the way up. But the lows that I like are these lows here, which we've gone and we've closed through. So we've actually broken market structure now. So we have come up, we've taken this high, and yeah, you could argue we've closed above, so we have made a higher high, but now we've closed below after this raid of these stop losses up here. Okay, so we've had a raid, purge of the liquidity, and then we've broken market structure to the downside. So now my bias remains to the downside. Now I'm just going to measure this out and just see how many pips this is. Okay, so this is a rather large stop, so which is good because in this example I want to show you the different sort of stops that we take and the different entries that we use. So this is 37 pips. Now, as a day trader, that is a hell of a large stop, especially on euro dollar. So I'd be looking for a way to cut that down. Now, the most simple method for me here would be to use this low as an area to look for shorts. Okay, so I'm going to set my ask there. So that's where I'm looking to do business. That's where I want to do. Other methods that we can do is we can fib the high and the low to give us the 50%. Okay, so we can see the 50% of this sort of zone is here at 18770. So if we just 18770, we could stick an order in there. So just change the coordinates on here, 18770. So that's another possible entry. We could trade the order block, which is this last up close candle before the move downwards. Again, let's just make sure this is all correct. Or we could trade this low, which forces the move in the first place. So those are 4 different entries that we can take on this position. And this is where this strategy becomes sort of discretionary and subjective. You can trade it how you like. I like to employ a fair bit of discretion when I'm looking at setups, because to me, there's 4 areas here that look nice to pivot short of. But the one that stands out for me is this low. So I would choose this low off any of the others. Okay, so I'm just going to delete those for now. So now we've got market structure break. We can literally set our order on this level, okay, with our stop above this high, because if we come up and take this high, price comes up here and takes this high, we're wrong on the trade. Okay, even if it spikes us out and drops lower, we're wrong, because what we've expected is to see this movement. So high, low, raid of that high, market structure break, return to origin or an RTO, and then a move lower. That's what we're expecting to see. So if this high then gets taken out, regardless of whether we're spiked out on a run for liquidity or whether it actually is moving higher, we were wrong on our trade idea. So we want to be out as close as we are to being wrong. Okay, so that's why I just stick my stop at that high and hope that we're not going to get, you know, purged for liquidity. Now I'm just going to play through price action just so that we can see where we would enter. Now the time away is nice. So we'd have just missed it off this low. See if it comes back to take us in. There we go. So we're in. Okay. So we've come back to the origin of this movement. Okay. So this is where, and you can refer back to the institutional order flow video where we talk about the order flow up, down, up, raid, break of market structure, and down. So obviously we have bank algorithms trading 24/7, pushing markets into areas and pockets of liquidity. Now let's just fast forward a little bit. We would have our stop, we would have our target either at this low or this low. You could take partial profits. Let's just stick our target there for now. It might be a wise idea to take partials down here on a break of this low. If we reject this low, we could take full profits and just play through price action. So there we go. Now this was it wasn't cherry picked, but It was on the screen at the beginning. I knew this was going to target, but this is essentially what we look for. Okay, after this big close through this level, I'd have been holding out for the target on this low, which obviously we achieved in this case. Now, that's the basic overview of what I look for, or what we look for, what we teach our students to look for. Is just spotting these areas where price may turn based on institutional movements beforehand. So let's just exit the replay. And let's just recap with all the candles on the chart. Okay, so we've seen heavy institutional orders come into the market here. Okay, they've pushed it into this pocket of liquidity, which takes a lot of money to do so. So we know that whoever this is who's pushed price up here, they've got some serious money. Yeah, they've got some serious capital that they're playing with. So they pushed into this liquidity, taken all the stops, triggered all the buy orders, and then they've sold against them. So they've engineered liquidity for themselves up here. Okay, they've created the liquidity by entering all these buy orders. Once all the buy orders are entered, either by breakout traders or stops above these highs, they then sell towards that buy side liquidity, which we know was, a decent amount because they've actually broken market structure and they took this fractal low and they took this low later on. Okay, so we know that this move was triggered by a big player. As we return to origin, this big player may still have some of their original order left to deploy. So what do we see then? Return to origin, they cancel out of this buy position that they would still be in. Again, refer back to the institutional order flow video if you don't understand what I'm saying now, but they're going to be in 4 orders here. Okay, so they bought into liquidity, they've sold against themselves, so they're now in drawdown from this buy position. They then buy back up, push price back to their entry, cancel out here, break even, and then offload the rest of their orders. And that's why we see this sharp move after we've had an RTO, which is where we enter the market. So now I just want to take a look at another example. So it's a similar situation. We have some highs. We have these highs over here, this high and this high. So I'm just going to mark it out from this high for now. Make sure the coordinates are the same. Got a run on the liquidity. Okay, and we've got a similar low to last time, which is the last where the institutions have pushed price into that cluster of liquidity up there. So we would set our ask price here. So we want to sell at this level. So as we set price as our RTO back to this area, it spikes down and then forms a similar situation to the upside. Now, in this scenario, you might be panicking, thinking, okay, we've had the similar case to the upside. Price has raided this prior low. Are we going to have further upside movement? But remember, we've got to take a look at the bigger picture. Has it broken significant market structure? It's broken these fractal highs, but remember what I said at the beginning. You've got to sort of use your discretion and say, is it a strong break? Are these highs going to have a lot of liquidity above them? And for me, they don't. So that wouldn't qualify to me as a strong market structure break. So I would still be looking for downside movement here, especially as price trickles away, comes back, and then forms a similar trap on liquidity up here. We then have that spike down through this failed market structure break, and we come back and do a similar sort of pattern down here. So you have a raid of prior lows again, and then price trickles away to the upside. But look, the last point of market structure is actually up here. So for us to be bullish in this case, we would need to see price come and close above this fractal high up here, this last significant swing point, which clearly it doesn't do. So what can we do here? Failed market structure break. So we still think the euro dollar is a bit brittle here. We still think it's weakness. So what we could be doing is we could look to add to our short positions that we might, you may have closed these here. You might have been targeting this low, but we can look to re-enter the market or add to the existing position if you still got it running. So then what do we see? See, again, similar sort of pattern. It's not the greatest high beforehand, but it does sort of come away from it for a period of time. And we are right above a failed market structure break. So for me, that looks really nice. We then break market structure to the downside. So like before, we could choose where we set our ask price. If we just employ the same technique that I've been talking about using the last fractal low, we'd ask here, we'd trickle in, draw down a little bit, and then bang, This is actually a fundamental candle. I think this was FOMC. Minutes being released 7 p.m. So I'm guessing it's FOMC. But this could be a case of this news being priced in beforehand, before the drop, and same again, drop, bang. But yeah, let's find one to the upside as well, just so that we can take a look from both sides. Here we go. This looks like a decent one. So we have a raid of this low. And the liquidity. It's the break market structure up here. So there you can see. Now, this is one of the ones where we're going to have to employ a different technique to get a better entry. So we break market structure, we can put a little tick there. Now for me, I'm going to check where the 50% is. So the 50% would be around 120,318, I believe. 318, yeah. So that's where I'm going to set my order. So 3. That's where I'm going to be looking to bid euro dollar. Now you can see if we had been targeting this prior high, we'd have got stopped out before price actually moved higher. Now, this means that we're going to have to always keep our higher time frame context and bias in mind, because daily bars beforehand might have been telling us that price was going to break through this level. But what we have here for further confirmation, or to scaling to get a secondary position, is a trade here, break of market structure, and then we could have scaled in here on this day again, which is really nice confluence that the move is going to happen again. So then we would have 2 positions, meaning we wouldn't have to, you know, try and let it run as far as we can, because we've scaled in and take our profits on the way up. So like I said, this is a really discretionary way of trading. You know, we have certain things that we look for. We look for that run on the liquidity from prior highs and prior lows. We look for that market structure break that needs to have a significant break of a prior high or prior low. And then we look for a return to origin before pivoting into a long or short position. So I hope that's benefited you in some way, being able to sort of bring context to the whole market structure and to the concept of liquidity, and how we can use that to find setups and trade ideas. And if you have any questions about this, feel free to just shoot me a question, and we can run over certain things. I understand it's probably a lot to take in, especially with the different entries that I've mentioned. But just go through your charts, mark out the runs on liquidity first. So just do something similar to this, where we see a high raiding a prior high, just like this, and then look for the market structure breaks. Don't worry about setting P&Ls. Don't worry about setting your ask and your bid lines where you're going to buy and sell. Just look for the runs on liquidity, and that's going to give you that framework for looking for the trade setups. We want to implement it in stages. So we want to implement the runs on liquidity, then the market structure breaks, and then we want to be looking for actual entries and develop it from there. So yeah, if you've got any questions, don't hesitate to shoot them over, and we'll see you in the next one.